Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Monday, April 17th, 2017, and this is the Daily Report for Gold and Silver. After trading to a pretty dramatic intraday high in overseas trading yesterday, gold prices actually came within mere dollars of that elusive $1,300 mark. We did see profit taking come into the market late in afternoon trading, with gold, although off of the lows achieved this morning, still trading lower on the day. We're looking at gold futures, this most active June contract, trading at $1285.90, putting it down about $2.60 on the day. Now the high was $1297.40. That is important. I'm going to show you a long-term chart in which that price figures right into our current market analysis. The low on the day was $1283.10. We're currently at $1286.10. So as you can see, we were trading about $5 lower, now closing about $2.50 lower on the day. When we go over to spot gold, $1284, down about $3 and change with a low of 81, and the high in spot gold was $1295.46. Silver also had a round of profit taking, but is currently back up off of those lows, trading off by about 9 cents today at $18.42, the low $18.37, with a high today of $18.65.50. Spot silver, pretty much the same, $18.40, $18.41, putting it off 11 cents on the day. So traders, as we go into the first day of the week, we definitely had an interesting scenario in terms of gold pricing kind of unfold today. I've put up a 720-minute chart, which means that each candle represents a half a day of trading, because I'm trying to break up the session that occurred overseas and look at it in conjunction with what happened once we came into the U.S. markets. Overseas trading, we did see a dramatic rise. This, of course, occurring on Easter Sunday here in Canada and the United States, but occurring in Australia, Hong Kong, and overseas last night. We actually saw gold prices go within mere dollars of that elusive $1,300. That is this mark right here. And as you can see, we came just shy, under $3 shy of that, when we hit a high of $97.40. Now, the market has been trading in an unusual manner, and that's simply because there is so much fundamental news out there, and that news is really unresolved in terms of where it's going to go, that you have market participants and traders rather nervous as to what could occur in the very near future. We saw the market come up, trade to these highs, and for the better part of the morning and afternoon session here in the United States, it was trading higher, although as we came in closer and closer to the close, what we did witness was some profit taking coming into the market, moving this market down to the lows that it achieved at 83.10. Market is closing roughly at 1286. We do have long positions, and my recommendation is to maintain your current long position. However, we will be raising our stops in the next 48 hours. Traders, we are looking at a daily chart, this in standard candlestick format, and when we look at it, it is a pretty ominous two-day pattern that has unfolded in the market with this recent activity. When we look at the activity that happened on Friday, that would be this candle here, what we see is a doji, and it's really in the star position, trading above the prior body, although the former day behind that was a doji also. And then today, we definitely have gotten an engulfing bearish. So it is something that we certainly want to pay close attention to, and there is my reason for wanting to raise these stops rather prudently. Now, when we convert this particular chart from a candlestick chart to a Japanese average chart to get an idea of the activity in terms of the trend and strength of trend, we'll go ahead and do that now. What you'll see is that it really takes all of the noise away. We still have a decent body size even with today. It stays green. And so although we have a diminished body size, this chart still tells us that we have absolutely good trend strength. But trader, here is a long-term study that I think you might find fairly interesting. There can be a solid case for a very, very long trend line beginning with these highs that occurred back when the market was trading at 1900, and then we simply take this trend line across the series of highs that came in, these most recent highs here, of course these highs here when the market traded to 1800, and then these highs here 1900. And lo and behold, what we find is that we are really just butt up against a very, very potentially strong technical resistance area. And to illustrate that point a little bit better, let me go ahead and blow this up now that you've seen where this line is coming from. And you can see that these highs that the market hit come in pretty precise in terms of right where this resistance line comes in at. So what that tells me is as follows. We do have some resistance here. There's no doubt. We see some of the proof of that fact by virtue of the fact that traders came in and sold this market in light of the geopolitical tensions that still exist and have not resolved themselves in any way. We see the red candle that comes in. This, of course, is just a bar chart because we want to focus on the highs and the lows rather than the open and closing ranges of the market, came just right up against this and then started trading lower. My sense for right now is if this becomes some sort of real resistance, the fundamentals behind it would be some sort of resolution in the current conflict that we have. The other end of this is that if we see the market break above this particular price point, which I believe is quite probable, then we should see a pretty dynamic surge above this trend line as it breaks a long-standing resistance line that has been in the market for approximately 5 years. In other markets that we follow, even with the extreme amount of geopolitical tension between North Korea and the rest of the world, or North Korea and the United States, we do have the Dow Jones Industrial Average staging a dynamic rally today, trading up about 183 points, closing at 20,636 on the day. Net change almost a full percent, 0.9% gain. When we go over to Standard & Poor's, same kind of a gain, almost 0.9%, closing up 20 points at 2349. And the NASDAQ also trading higher on the day, gaining 50 points at 58.55. US dollar did contribute some of that upside momentum to gold today, and we have the US dollar under pressure today at 123, putting it down about 22 points on the day. And crude oil also trading lower, trading off almost a full percentage, and closed below 53 at 52.68. So an extremely, extremely strong day in U.S. equities with the Dow Jones Industrial Average gaining 0.9%, almost a full percentage gain, 183 points to the upside, closing at 20,636 on the day. What is interesting when we look at this daily chart is I have our two long-term moving averages up. The dotted line, of course, represents a 50-day moving average, and this our 200-day moving average. We can also see that since the election of Donald Trump last year, November of last year, we had a dynamic move, and it moved above the 50-day moving average after really trading sideways. We can see that here as the market is trading above here and below here. But we had a dynamic move up, and the market stayed in solid momentum to the upside, really until approximately, a week and a half ago, 2 weeks ago. At that point, the market did trade sideways, but it traded above the 50-day moving average. That all changed on Thursday of last week. Market breaks below that. Friday, we have another down day in the market. And at this point, of course, we had this market really clip higher. The question is whether or not we will see prices move above this 50-day moving average, because if they do, it is really signaling a strong move in U.S. equities. We are looking at the U.S. dollar, this being a daily chart. I do have our 50 and 200-day moving averages up. And like the equities markets, we did see pricing on the dollar, which had been trading strongly higher over the last couple of trading weeks up until the beginning of last week, in which it started to trade under pressure, did break below the 50-day moving average. It did try to recover, though, and then we had a strong dollar, of course, on Friday. However, today we did see some weakness with the dollar trading off by about 0.3%. And when we look at the daily Japanese average chart along with a basic fib retracement, what we see is that we should, or could, I should say, see a continuation of dollar weakness as we approach 99.27, which is where I'm looking at the dollar to potentially find some support if in fact it continues to trade lower. And lastly, do want to take a look at crude oil. Crude oil definitely has hit some sort of resistance just below $54 per barrel. It is still trading above the 50-day moving average, but we have seen some weakness come into the market. That also corresponds to recent activity and recent tops in the market, as seen in this daily chart through December and the beginning of this year, in which we had crude oil really trading in a tightly defined narrow range with highs just at around 54, a little bit above that, the lows sitting at around $51, and that of course was until we saw this market break and break hard, finding support at 47. I believe we could see further weakness in crude oil, taking it to about $51 per barrel. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.